All right, folks, come on back here to the Diagnostic Trading Hour. Glad to have you back here right here on TFNN.com. You can listen to us on Tiger TV as well, and on your mobile phone at TFNN.mobi. Let's check out where the markets are at right now. Bring that up on the screen for you. And, of course, don't forget, you can check us out inside live in the eSignal platform now. We'll get on over at the S&P. It's currently up 3.5 points. We got the Russell up 1 point. We got NASDAQ up about 10 points on the day. Looking over at the Dow, we got the Dow up 28 points. So some nice moves right there. Looking at copper, we got copper is down about 0.7% right now. So moving on down. We got gold is pretty flat on the day comparative to settlement. We got silver currently up 0.25%. We got natural gas up 2.6%. on natural gas inventory release day. We'll get on over at oil. Oil down $1.57, so just a beautiful, nice trend move down on oil there this morning. We got corn currently up 3.5 points. We got soybeans up 9, so some decent ag moves, about 1% each. Looking at the FX pairs, we got pound dollar down 5 pips, euro dollar down 1, euro pound up 8 pips. We got the dollar CAD is currently down 10. Dollar franc is down 9. US yen up 4. Pound yen up 6. Euro yen up 7. Aussie yen up 8. And wow, that's just quiet. So, but check it out. Like I said, we got our energy markets moving. There's always something moving. There's always a market to trade. That's why I like to have a combination of energies, metals, ags, indices, and currencies. Those 5 sections right there allows me to always find a market that's moving. We got oil right now. It's down there about $96, so really flowing on down, and some pretty sweet moves. Hopefully we can, hopefully you got a little bit of that, and pretty much started after the market open right here. We got 9:30 and just started shooting straight down. I mean, you can't get too much cleaner of a trend than that right there. Let's see what we have. I'm trying to see some other things we might be able to do right there. But yeah, I mean, this morning it was just a sweet, perfect trend. And I was teaching some people just the simple MVP, momentum volatility predictor system, this morning. And one of the things I recommend is as you learn different systems, and you can start, basically the idea is you can start combining those together. So as you see things flipping over, you're like, okay, so this is how this works. This is how I can use it. You start putting some systems together, and you start getting confirmation. You can get earlier entries. You can get maybe a trade where you wouldn't normally take it. You might take it because now you have 2 other systems telling you to go short. So, tying in different pieces like that can really help. You add on spike trackers on top of that, and just put some of those pieces together, and you start getting some pretty cool combinations. And we'll look at natural gas here in just a second. But, so right here we'll go down to 5 minutes. And I prefer the 10 minutes on MVP because I think it's a cleaner trend overall. You're not as likely just to get, nailed on it. But, I mean, you could do 5, but I've just done 10 mostly. But you can look for, maybe where it coincides with the spike tracker or not. So here's a spike. It doesn't break out of the high. Your MVP is also short. So here's another spike. It does break out. It's at top of hour, which I usually don't like. Does break out. MVP's short, so it's going anti the MVP. So you can see how tying some systems together can give you confirmation. Now, if you're doing in the money trades on either one of these, you would have been fine. But just sort of looking at them, there's an MVP to go long, but your MVP short, your spike tracker is long. So ideally, you get things lining up that can be, even sweeter. But usually, they often are going to conflict on the spike trackers and the MVPs just because one of them's a trend, one of them's a counter trend. So, but just putting some of those together, and we see a couple nice clean trades this morning. There's a short trade right there. There's a long trade right here. And just, again, putting some different pieces together. But let's check out, we had natural gas. So let's go in. Let's look at the natural gas move this morning. And don't forget, by the way, oil is going to be rolling over tomorrow after the close. So make sure you got your oil set to roll. And on Nadex, okay? And but let's pull up natural gas right now. And look at that. So nice move. Pops right up, pretty much at the expected range. We can go in and grab that right there. We can see, just a few ticks shy of meeting the expected movement. So pretty standard move right there in oil inventory or natural gas inventories, which happens every week. And I'll throw some expected volume on there. We'll look at that as well. And once that comes up, all right, so we see that's where all the volume is. That's obviously where the volume spike took place right here. And so as that happened, our spike striker, volume spike trade, pops up, gives us a great, potential short right there. So 5, that doesn't break. We got, 10, then 15. So often I expect a reversal off of it. You're going to be looking for a very high potential reversal trade off of it. It actually pulled down and pulled on back up, almost back to the high, and hasn't quite got back up to the high of where it was right off the spike. But we got a perfect expected move. Just like I said, it's a few ticks shy off of the natural gas inventory report of how far we said it would go. I mean, just like a couple ticks right there. And going long into the trade. So there's an MVP long that's happening like all morning. Was long at 6:30. Gave another long additional add-on there at 9:15. And actually just gave another one. So it'll be wrapping up pretty soon. I wouldn't expect a whole lot of movement left, though. I mean, obviously you can just tell the expected ranges are a lot smaller than they were earlier. So really that before, the before and after a couple hours, you got a little bit of room. And outside of that, I mean, natural gas is just flat. So you can see that right there, and then get a little bit of movement like right there in the middle of the day. But this lets you know when to expect the market to move, what hours do you expect the market to move, when do you expect there to be decent volume in the markets, and just put all the pieces together. But we were pretty much right on par today with expected volume. So you can see that. I mean, it's almost perfect to the cycle of what we expect to happen on a Thursday afternoon here. And so just market playing by the rules, so working how it should. And you got all sorts of trades in here. You got P2s, P1s, P3s. Well, no P3s on natural gas today, but P1s and P2 trades. P1 being a phase 1 trade, a breakout trade right at the top of the hour. You got phase 2 trades where it's a reversal trade or a classic boomerang trade. That's where it pops up, moves the expected move, and comes on back down. And a lot of that happening this morning. So hopefully all of y'all were able to capture some of that. Let's see what all news announcements we had. We had natural gas. We had a few others on top of it. So let me pull up some of the other ones that came on out. And I'll go into that with you. We'll pull it up. Give me 1 second. Maybe we'll even see if we can potentially, find a trade on the list here. And one of the favorite areas I like to look at this time of day is I'll hop in on gold. So let's see what we got. Messing around on gold right now if we got any spike that might be taking place. Or just some general market movement that we can take advantage of. So we had an MVP buy. That was a profitable long trade right there. But we're on the current hour. Really just all is quiet throughout the house. There's not a whole lot going on that we can take advantage of. Let me look at the binary contracts that are available. On gold we're sitting at, 1314, 1314.4. And let's see here. Now what I'm doing is I'm going in and I'm using the scanner and drop a few instruments off, grab gold, and see if anything is there at all that we can use. We got a buy at 66 or a sell at 62. So neither one of those do I see anything on the chart that makes me think I should go in and put the money down on the trade. So sitting back on gold right now. Okay, well, let's see what other news announcements we had out this morning. We had out a few GDPs over in Europe. PPI there on the franc. We had final CPI out of Europe. We had unemployment claims here in the U.S. and natural gas storage. Unemployment claims actually caused a little bit more movement than normal, even though it wasn't a big variance in the price. And let me pull up our little news plan that we go through, and I'll open up each one of those. We can see how did it work. So I lay out the news trades for you each, usually Monday or Tuesday. Get them all laid out, and we cover them again. But let's see. Okay, so on the list for this morning, like I said, we had some GDPs and stuff happening. So let's pull up the Euro real quick because we had a lot of stuff going on there, and but pretty quiet overall still, despite all the news coming on out. All right, so there we go. We got Euro, and if we go back, some just announcements. They had early morning AM announcements here. So we'll back out to those. You can see really like little to no impact from lots of little volume spikes happening. So, but it's not massive moves within themselves. So we had the French GDP had a volume spike, but I mean it was a movement of a whole 12 ticks. And then we had later at 2 o'clock, we had the German GDP come on out. Obviously a major economy, but still a 12-tick move. So what can you learn from these? Well, from some of these little be aware events, I mean, you got great volume spike trades. So, that's something that I'm learning more and more, is that even some of these small announcements can still really set up to be really good trades for you. If for nothing else, Dan, for volume spikes. Okay? So something as small as these little, GDPs and everything else. But yeah, so the French preliminary GDP, the German preliminary GDP, both of those, you got a volume spike, pops around, and then the German one, you got one as well. These are a little bit more aggressive entries because they didn't really pop back up, but they're not high impact events. They're lower. They rate them as high, but in reality, I mean, you can see they move 12 ticks. Okay, so even though they're rated high, they really aren't high impact events to cause a massive reversal. But this one just really didn't reverse. It just went flat. The second one did reverse on back up by the end of the hour, but it took its sweet time. But a little bit more aggressive on the spike striker side, but you do see them there. All right, so there we'll go through the other announcements that came out and just some things to expect when they're coming out. All righty, folks, we'll come back here to the Diagnostic Trading Hour. So going through the news today and just looking through the whole list on Forex Factory, all that fun stuff. Some of the GDP, how there's some good, just start watching these news announcements. It's just a good time to start looking for spike strikers because it pops out, volume comes out, backs off, even if it's not a big announcement. Okay? We even had, we had some CPIs at 5 a.m. Let's see, we have anything going on there? Let's scroll on forward and check it out. So 5 o'clock, spike striker never triggered, so never broke a low. Pulled on back, but definitely some movement. So, nothing, I mean, it wasn't massive, but that was a decent little move. Let's see, what do we get off that? Yeah, 35 pips. It's actually a pretty big move for a CPI release. So that's pretty, on that one right there, we were looking for 35 pips on the trade. So how did that one work out? Because this is a news report we gave you for last night. So let's check out this trade. Let's measure it and see if it did what was expected. We said we had a 35 pip expected move between 11 and 7. Approximately, we expected basically to come on back. So let's measure. We got over here our high, 37 pips. Right over here, our low, about 11 pips. What about our open to close? Because that's what we were doing, right? We're doing a Iron Condor. Let's take that to 7 a.m. 15 pips. So great trade. 20 pip profitable trade. Hopefully some of y'all were able to capture some of that, if not all of that. But very, very good trade. If you hopped in later, could have even been a little bit better for you. So you could have got in. Yeah, so we had an 11. That's what it was. So 5 o'clock. And let's see on that one. But anyway, so trade expected exactly. The market moved exactly how we expected. The market moved exactly how far we expected it to move. Again, how can this help you even if you don't trade news? If I say 35 pips, minimum profit on a Condor, that means I don't expect the market to move more than 35 pips. So market moves on up 37 pips between 11 and it's like 5:30 after the news comes out. That is a potential reversal trade. It's definitely a tighten your stop, take your profit signal. Okay? So even if you're not in there trading the news, this can help you out. And the market did do a pretty decent little pullback, and it moved on back up, and then now it's just giving it all away, moving on back down. So the euro dollar looking really, really flat, even though it wasn't as flat as it looks. Pretty much gave all the movement right on back. Okay? All right, so that would cover our Euro CPI. We also had our franc CPI trade, so let's go check out the dollar franc. Look at that. All right. So we can go in here. And we had an 11 o'clock, no later than 3, and checking it out. 11 o'clock to 3 a.m. with the 7 a.m. expiration. So let's see, how far do we move? We had some decent movement on the dollar franc last night. Moved 18 pips, which actually is a decent move on the dollar franc. And moved down how many? Moved down 38 pips. We had an expectation on this one of 35, so maybe been less than 38. I may be just off with my... There we go, move that up. 36. All right, so we're one tick off of how far we said the market should move between 11 and 7 o'clock. So perfect. Moved one tick more. It pulled on back to 18. For a 35 profit, you're looking at a 17-tick profit on the trade, and that's putting something on and going to sleep. Okay? So not too shabby, just letting the paint dry overnight and collecting the premium in the morning. So, anyways, another great news trade. So I hope you're learning to take advantage of these. If you don't know what all this Nadex noise is about, hop on over to TFNN.com. Click on the Nadex banner on the right side of the page. Let's see, where is that one at? Yeah, we'll just hop on over here, trying to find, I know they've changed some stuff up. But anyways, we'll just go straight there. So go to Nadex.com. Okay. As soon as you've done that, go to Trading, Demo Trading Account. Click on first name, last name, phone number, email, address. You can apply for demo, check your email, and you'll be able to log in and we start demoing these trades right away. We'll be back right after this. All right, folks, come on back here to the Diagnostic Trading Hour. All right, so yeah, it was on the page there. I just didn't see it. Again, hop on TFNN.com. Right side of the page, you'll see the Nadex banner right there between Watch Tiger TV on your mobile device, which is a new addition. It used to be listen, now you can watch it. And again, click on Nadex right there, education, trading, and then demo trading account. Go ahead and register right there, and I do webinars for them as well. So if you want to listen to some of the webinars I do, make sure you register for at least a demo. You'll get notification of when those webinars are going to be. And then you can get a live account, open a live account, fund it with $100 or more, place at least one live trade or more. They'll extend your demo out for a year. And it's just good to have that for your practice and everything else as you learn how to trade like these news trades that I go over. Let's see here, some other trades that we had. So we had the Euro CPI, we had the dollar franc trade worked out perfectly right on schedule there. And we had the unemployment claims actually moved a little further than expected. Let's go ahead and pull that one back up on the euro dollar. And we'll look at that. Okay, so looking at the euro dollar and the movement from this morning, we got 37 pips, and we really had an expectation. Now, that was 37 pips from high to low. Let's see, what do we have? We had a enter at 8 for a 10 a.m. So let me drag that on over here. We'll look at that trade. So we got an 8 a.m. I'm going to have to zoom in so I could really see what's going on here. There we go. Got a 8 a.m. Take that to 10 o'clock. Actually moved 29 pips, so it was a little better than I thought. But we expected it to be a smaller move of 25 pips on the day. So it was like a 4-tick loss. The other two, both made 15 to 18 pips each. This one lost 4 ticks on it, but pretty much moved the expected range, but just stayed above it by a few extra ticks. And again, we got another spike striker right off unemployment claims. Market ran up the expected move. I was talking to some other traders this morning. Spike tracker pops up, says, hey, market's going to go short, gave you an earlier warning than the MVP itself. Went ahead and went short. Would have went short right here. You could have went down to the expected range because it would have been out of the money potential because you have not moved up in the expected movement. It's been a straight down move for that hour. So you have that movement there. You go 5-10 ticks out of the money. You have a nice high profitability trade. Close the trade out, take the profit, move on. But anyway, so not bad. And again, a great indicator, even if you're not trading unemployment claims, even if you're not trading Nadex, just to know that the market has moved that expected move. So don't be surprised when it goes up and pulls on back. All right, we also had the US PPI. That was a little bit lower expected move, but we were obviously going to go with the higher one. So let's see here. Let's see what do we got on this. With the unemployment and the PPI happening at the same time there. So if I have a 25 and a 21, then obviously you'd go with the higher one out of the two, both being on Euro USD. And then we had natural gas storage. We already knocked that out on the expectations there, and basically just making sure you're trading spike trackers and stuff on it. And then let's see, we had one other trade that I had not covered yet. Let's see for tomorrow. And let me open it up. See what we got on the list. And so far what I got on here, I'm trying to walk through each one of these. My news calendar. Okay, so we got the French and Italian bank holiday happening tomorrow. So be aware of that. Who else is closed? Let's pull Forex Factory up over here. We'll wrap up tomorrow's news plan for you. So yeah, French and Italian bank holiday. We got a second estimate GDP. We got to be aware on that one. May come back and look at that. I may check that out again. I was looking at Empire State Manufacturing as a potential trade. We got PPI, core CPI, manufacturing sales all happening at one time. Let's see what we can do with that. And I want to say we did have a trade on that one. So give me 1 minute. I'll tell you what it is. These are not coming out 839, 915. So this is one of those where we're gonna group every trade on this list into one group because we got manufacturing sales, PPI, core CPI, Empire State, TIC, capacity utilization, industrial production, consumer sentiment, all that. So we're gonna go for like an 8 to 10 move on this. And looking at this, it's really not a big mover. I mean, we got, let's see, what do we have here? By 10 o'clock, got 8 ticks, 2 ticks, 17. Biggest day I've seen so far on the list, we got like 40. Okay, so that's a big day. And that had the core PPI. The other ones, let's see, all of them. Looks like we're on PPI on that. Okay, so, and let's see, the next one, we got 11 ticks. We got 25. We have 2. After a rise up to 23, moved on back down to 2. We got 10 ticks. We got 9. We have 25. Shot up to 25, pulled on back down to 15. Okay, so what I'm going to go for this, I'm going to go for a 25 pip minimum profit for an 8 a.m. to 10 a.m. expiration on the euro dollar, okay? And that's for all of those news trades that we're listing between 8:30 and 9:55, all combined. So that's your TIC data, that's your industrial production, that is your capacity utilization, your PPI, your core CPI, manufacturing sales, really in all of the above, okay? I want to look at one other thing, since we do have the manufacturing sales happening right there on Canada. I want to go in and pull that one up as well. I'm going to look at the dollar CAD specifically. And let's see here. Let's see what we get on a pip move when this report comes out. All right, so last trade, 10 o'clock. I should have spiked right at 10 o'clock, which is pretty interesting. I mean, it wasn't even when the report came out. At 10 o'clock, it spiked up like 25 pips and pulled back. Let's see. So there was no news either. Going on down, we got 10, but it's still 25. Okay, and then we go down, we got 5 pips. We have 6 pips, 20, 2.5. One of them was massive. It was like 80. That was with building permits and housing starts at the same time. Then we got, 13, 8, and 15, 8, 3. Okay, so all of them are small except for one, which was just insanely massive. By the way, I mean, it didn't go straight up. It was like up 16, then it was up like 28, then it was up 38. It took its time, okay? So on this exact same trade, just looking at everything on it, I'm going to say go for, again, 25 pips of minimum profit for an 8 a.m. to 10 a.m. expiration on the dollar CAD. But I would definitely have a stop on this trade at 40. Okay? So if you were down $40 net negative, that's where I'd be hopping out. And so the way to really know, like, what does down 40 mean, especially if it moved 40 pips is what I mean. So if we had to move up 40 pips, I'd hop out of the trade. So just look at where the dollar CAD is when you get in, add 40 pips or subtract 40 pips, okay? And then you'll have your trade. And just I just would not want it, if it moved up 40 pips or down 40 pips, I'd want to be out of the trade because that may mean it's a big mover. We've only had one big move in 12 months on this instrument. So on the dollar CAD here. So I would not really be too concerned about having a big move on it. Like I said, it's a very rare instance when it does happen, okay? So that's a manufacturing sells on the CAD using the dollar CAD, 8 a.m. to 10 a.m., $25 minimum profit, doing an iron condor, buying the lower spread and selling the upper spread. And let's see if that gives us anything else we need to be aware of. Okay, I think that ought to cover us there. And wrap up. Yeah, that's the news really for the week, all done and ship shape there. So I'll do a quick review for you on what an iron condor is. I talked a lot about straddles this week in the archives. If you want to watch those archives to see that short straddle review, an iron condor is pretty similar. It's a straddle in reverse. That's the opposite thing as a straddle. So if you get straddles, which I think really is the first step to getting iron condors, is understand what a straddle is, understand how a straddle works. And so if you've watched that, then the next step is to learn, okay, how does a iron condor work? An iron condor is an easy way to put it is go in and find a contract, such as we'll go choose Euro dollar. And you could literally just do 1-to-1. Okay, and you could find the straddle. This is one of several ways to pull this off. And you go, okay, well, here's a straddle, buy that at 3, and then go down here and, sell this one. So they're lined up. It looks just like a straddle, except for what we do is we actually do the opposite. Okay? So now to really see what it looks like, I'm going to reset my filters. I'm going to come down, I'm going to go, okay, well, I'm 3370 by 3470. So I'm going to find the 3370 by 3470. Get rid of that one. Now I'm going to find the 3270 by 3370 up here. So we'll find that. And now it's the opposite. Literally, it's upside down. Okay? So upside down iron, basically a straddle. And what we're trying to do is we're trying to collect the premium. Now this one obviously doesn't have any time value, and if there's nothing here, it would not be worth doing. Before news, 2 hours, 3 hours out, I mean, we're like, an hour out on this and there's no news scheduled. If you can get, say, 10, 15 pips of premium in each side, you can have a solid trade and bring in, say, 20, 25 pips, 30 pips, maximum potential profit. And so what I'm doing is I'm looking at this. I find this is one easy step to do is find the straddle, then on your sell side, find the buy, on your buy side, find the sell, and now you have your iron condor. And then you can look at your two max profits, add those up. Do they equal the minimum required profit, okay, for the trade to be worth it? So that way if the market moves, for or against you, then it can still work out well. With that, you put the trade on, and really you don't do anything. I rarely take profit because I don't want to pay the bid-ask spread. It's hard enough to get the profit anyway. And you just let the time decay. And it's sort of the opposite of what a straddle trader would do. They go and they do both of them. They do a straddle and they'd lose on the time decay. You're making the money that somebody who was playing just straddles would be losing at the exact same time, waiting on the market to move. And that's why I'm so big about having all these stats and understanding how far the market will move up or down or total move in between a certain time frame specifically, so I can know what's better. We had some awesome straddles this week. Like on the pound, we had a great straddle where it moved like 100 pips. We said, hey, it ought to move about 80. It moved 100. Then we had some great condors where we said, hey, it's not going to move more than 20, 25, 30 pips. A couple of them, like right on the line. But overall, pretty much knowing it, just looking at the the last 12 months and zoning in on how far those are going. But that's an iron condor. You literally just go in and you just buy this contract, and you'd sell this contract right here, and just let it play itself out. Now you can put stops in. You can go in and get out if it moves up, like say so many ticks against you. But just make sure you got your math down, your math right when you're doing that. But it's not that hard. I mean, what's your maximum profit? Double that, and that's where you can put your stop. So if your max profit is 20 ticks, and you can go 40 ticks above where like euro dollar or dollar CAD or whatever it is at that moment. 40 ticks above that, that's where you get out of your sell. 40 ticks below that, that's where you get out of your buy. Okay, so pretty simple to put that in there. Not logged in at the moment, but they're very simple trades. They do take a little practice. Once you get them down, it's just second nature. It's like click, click, boom, done. And what I love about them is you're spending about 5 minutes doing a trade. I mean, it literally takes 5 minutes, and that's if you're taking your sweet time. And because again, you're really letting the premium just sort of work for you there. And let's see, what else do we have? I know I emphasized this a little bit yesterday, but just to go over it, I wanted to show you right here. Let me show you some of this stuff. This is part of the report I sent over. And okay, so I sent over this proposal to Nadex, and I said, hey, we need to, hopefully we can tighten this up a little bit. And and they were awesome, and they totally listened. They brought it in, they put it together. But the market was going outside the strikes. There was no trade that I could do. And we gathered these stats over like a year and put them all together and put the percentages together. And I'll share some of that with you when we get back right after this. All right, folks, going back here to the Diagnostic Trading Hour. So just going over the changes that happen and what this does for you as a trader when you're trading on Nadex. You can go and you can see, looking at this example, how we have the chart where it runs out of strikes because it goes outside of the range. And so if you want to do a sell, I mean, there's only like a deep in the money with no value. You want to do a buy, there's only a way out of the money, no in the money, no at the monies. And you can see, every hour just about you're running out of strikes, at least for a little bit. And so with the changes, now it looks like this, where it completely encapsulates the price action. And so massive improvement right there. Before, you could barely trade Russell. Now you can trade it with no problem. And just to show you, kept the average strikes crossed at 3 with a small change in width and an increase from 9 to 15 strikes. We were able to bring a 41% of the time inside the high to low to 88% of the time inside the high to low. And so really this made just a massive improvement. Aussie dollar, you can see I had no problem staying inside the ranges, trades around the clock. But the big problem was it only crossed like one strike. And so we tightened up the strikes, and I sent that over and did all this research on the last 12 months and made a massive difference going from 1 to 3 strikes crossed, still 80% of the time or greater. And so just really a very, very cool improvement on the Nadex exchange. So complete kudos to Nadex, upper management for listening and implementing, putting that into place. It's going to make it where the volume is going to increase. We're going to be able to place more trades. Be easier to find the trades that we want to do. They've implemented this on the dollar franc, the dollar yen, the euro dollar, and the Aussie dollar. They've also implemented it on the small cap, basically Russell, Dow, S&P, and NASDAQ. And then they'll be adding in more as well to it on international indices, and like FTSE, DAX, Nikkei, and also on the other 6 FX pairs, and even the commodities, the ones that have intraday strikes, be adding those in. So hopefully we'll be seeing that here within the next few weeks. They'll start rolling out the additional FX pairs. And then from there, my big hope is that we can at least get all the intraday, the FX, get all those trading every hour at night. And some other cool changes, they should be adding in Aussie yen, Euro pound spreads soon. Also, they should be starting to set the strikes at 5 minutes before versus 10 minutes before they come out. So, anyways, lots of little tweaks, little improvements can make a massive difference and make the product just that much better. And I was just really glad that after all that research, they actually took it in, and they're like, this is amazing. We were full of the stats. We showed them exactly how it all worked. And just basically, like I said, we put them side by side and showed them sort of the before and after and the difference and the increase it did. And it's one of those things that you honestly never would have noticed unless you were sitting there trading it all day, day in, day out. Because you say, it's out of a strike. There's not one there. Not a big deal. It happens occasionally. But if you're trading it constantly, every hour, day in, day out, then you really notice those little things and how they impact your trading system. And so it's something that I think only really a trader would have been able to figure out. A programmer could have went in and do it, but they wouldn't even know what to look for unless they had been sitting there watching it all day. So, anyway, it's been sort of cool to be able to help, shape the exchange a little bit, have a part in that, and make it better for all of us. All right, well, that pretty much gets us caught up. We do a quick market wrap here on the end of the show. We still got most of the indices are in positive territory. Russell's pulling back negative, and pretty quiet in FX with a solid move, trying to pull back a little bit on those energy. All right, y'all have a great day, and I'll see you tomorrow right here on the Diagnostic Trading Hour and in the morning on the Bull Bear Binary Hour.